Greetings, members, one and all of the Salivation Nation. Gold's price reaches an all-time high again. Is $3,000 just around the corner? Let's explore. The reason why I say again is because literally just under 2 years ago, we did see it break an all-time high. It's very unusual to see this happen so quickly, but we know these are unusual circumstances we live in for sure. And what is driving the price of gold? You guessed it. Right now, it's all about Russia and Ukraine. Make no mistake. That is why gold's price is so high, and that's why palladium's price is also well above its record high at this point. And by the way, rhodium and platinum are both reacting as well too. And silver is hanging on. Its price is rising about the same rate as gold is right now, which is a little frustrating to silver stackers, as silver just can't seem to catch a break with the gold to silver ratio. It has actually widened to almost 78 to 1 now. So even though we have seen silver prices move up substantially today, based off of gold's movement, it should have moved much higher. Now, there's myriad different reasons why that's the case, but I want to focus on gold in this video, and we're going to talk a little bit about this here. But first, let's look at these prices. Gold is now trading at $2,052.40, up $52.80 today. That's right. That's over a 2.6% increase. Wow, look at that. So here we go. Record high. It hit this record high and then it backed off a little bit. Gold and silver prices are still sharply higher in midday U.S. trading, but are off their daily highs as we saw COMEX gold futures hit a record high of $2,078.80. Wow. Silver prices notched an 8-month high of $27.49. However, both metals prices have backed down from their highs on news reports that Ukraine says it no longer is seeking to be a member of NATO. And of course, one of those things, as far as how the language is crafted here, is they are no longer seeking it. But maybe if NATO says, well, hey, would you like to be in NATO? They'll say, hey, sure, you asked, so I'm going to go ahead and say yes. That very well could be the case. How that language is crafted, we'll see how that plays out. But U.S. stocks rallied on the news. Traders are thinking, more like hoping, this is Russian President Putin's off-ramp to stopping the war. Right now, that's just wishful thinking, however. Gold futures were last up $49.10 at $2,045. And the Magna COMEX silver was up $1.13 at $26.84 an ounce. Global stock markets are mixed overnight, and U.S. stock indexes are higher and near their daily highs at midday. The Nasdaq stock index has moved into bear territory, down 20% from its high. The Dow Jones Industrial Average is in correction territory. And obviously we're also looking at the oil prices as well too. NYMEX crude oil is higher, trading around $123.80 a barrel. The all-time high in nearly NYMEX crude oil prices was scored for these crude oil prices in July of 2008 at $147.27 a barrel. So the U.S. dollar index is weaker today after hitting a 21-month high on Monday. In fact, I'm going to take a look here on my app and see where it's at now. Crude oil is now at $124.80. That's up $1 from the reporting of this video. The U.S. 10-year Treasury note is presently yielding 1.875%. And so we can see there. So technically, gold futures hit this price of $2,078.80 today. And bulls have the strong near overall technical advantage and gained more power today. Obviously, prices are in a 5-week-old uptrend on the daily bar chart. Bulls' next upside price objective is to produce a close above solid resistance at $2,100. And boy, that if we break over $2,100 with gold, I think we could start to see a new level of psychology with regards to the price. And that's going to get into the second part of this video about what could be around the corner for gold. Bear's next term downside price objective is pushing futures prices below the solid technical support at $2,000 now. So there you go. So now we're seeing some building strong support around that $2,000 an ounce now. First resistance is seen at today's record high of 2,078.80 and then at 2,100. So very, very interesting indeed. We won't get into the silver futures market and the technical analysis there. Let's move on to the second phase here. Is $3,000 gold price next after it's breached its all-time highs? And that is the question, as asked here by Anna Golubova from Kitco News. And before I start into this, just understand that typically when there's a bull cycle, it's only natural to want to speculate higher. And that's typically the case, and we always see the opposite at the end of the spectrum when it's on the downside as well, too. But in this case, it doesn't look like this crisis is going to end anytime soon, but there may be some ways out, especially after what I heard about some negotiations and at least about some of the news that what Putin is looking for. And, and again, this is one of those things where people have different opinions on what's going on in Ukraine. I have my strong opinions about it, but I don't want to necessarily cloud how they affect the markets. And that is the key here, folks. Just as was the case during the COVID-19 pandemic, you can have your feelings on any given topic, but one thing is undeniable: they do affect the markets. Whether or not it's based in reality or it's the perception of reality that the markets react to, not necessarily the reality itself, even though I think what's happening on the ground is very real, and many of the things that happened with the pandemic were very real too. Nonetheless, it's how the markets react to it. That's how we respond and how this is played out here. That's the discussion points, is that perception, which can drive prices up. Because think about it, folks. Gold and silver prices are a reaction to when the markets are in turmoil. They react positively in these cases. This is exactly what's going on here. So we did see gold make a massive move to new record highs above $2,070 an ounce as the markets priced in America's ban of Russian oil and other energy imports. That's what caused it here. For today, that announcement that is what's happening. The precious metal powered to new record highs of $2,078.80, as we mentioned. This is up more than 4% on the day, driven by safe haven and inflation hedge buying. April COMEX gold futures were last at $2,075.30. That's up $80 on the day. The geopolitical uncertainty concerning Ukraine and new sanctions against Russia have created strong demand for gold. And think about these sanctions right now with this announcement about banning all Russian gold, and that's another story too, which I'll probably cover in a separate video, because yes, it is announced that some senators are looking to create legislation that would freeze Russian gold assets. I don't know how that's going to be done. What that means, they can't get any more gold from anywhere. I don't know. Already the LBMA has put a stop to refineries that want to sell gold outside of Russia, as I've reported on that early on when there was speculation, when they were asking questions about it. Now it's happening for sure. Anyways, the geopolitical uncertainty and the sanctions are something that is what is causing this strong demand for gold. Investors are viewing the precious metal as this hedge against risk, inflation, economic shock, and additional geopolitical uncertainty, according to analysts. Since the war in Ukraine began, gold ETFs alone saw 55 tons of inflows, said Commerce Bank analyst Daniel Briesman. Now, that's a lot of gold of inflows with gold ETFs. And is that considered manipulation? I don't know. Is that a natural buying? I would make the argument that it is. Natural buying of gold, people are concerned. Gold is in a considerable demand as a safe haven, as evidenced by persistently high ETF inflows. According to Bloomberg, inflows totaled more than 14 tons yesterday. Inflows since the invasion of Ukraine by Russia have been amounted to 55 tons. Plus, this particular geopolitical conflict has spilled over into broader economic and inflation expectations, which makes its impact on gold more permanent. That's right, folks, more permanent, which means that the days of $1,600, $1,700 gold are behind us. And I remember when gold reached $1,700, where hey, wouldn't it be nice to have $1,200 gold again? We may very well get to the point at this rate, especially considering that some of this stuff is going to be permanent, because even if Putin were to pull out right now, there is lasting damage because of this situation. It's going to take quite a while to recover and to get back, because we're not going to trust Russia for quite a long time unless there's literally regime change there. But nonetheless, this particular geopolitical conflict is certainly causing a lot of concern. We are drifting towards full-blown sanctions, TD Securities head of global strategy Bart Melek told Kitco News on Tuesday. Typically, the risk premium to gold following geopolitical events peters out quickly. But in this situation, even if things calm down, you will still have an inflation problem, indeed. And it's going to be exacerbated by what has already occurred with what's going on in Russia. It doesn't look like it will calm down anytime soon. You're hoping for peace, but it doesn't look likely based off what we've seen lately. We're going to get these supply shocks counting across the board. Now, what is the way out for Putin other than what we talked about earlier with what Zelensky is saying, that Ukraine will no longer seek being added as a member into NATO? Well, there's this. That Russia says that Putin says that all he wants is a few provinces, mainly in the east, Donbass and some others, and other territories that he wants to expand, and he will be happy with that. So let's say they come to an agreement, and Zelensky says, okay, you can have those provinces that you demand, maybe Donetsk and Donbass and the others, and expand maybe even Crimea region a little bit. If you leave the country, we'll agree to that. If they come to that kind of consensus and they pull out, well, then it's a matter of rebuilding what's been damaged and getting all those refugees back. That is one option that could take place here. That is probably the quickest path to at least the ceasing of hostilities and or a ceasefire, and having the troops being moved into those areas to I guess facilitate the transfer of those facilities over to Russia. That's one possibility, at least, that we're looking at right now. But my guess is that's probably not going to happen. Drifting ahead or moving ahead here, we'll see. U.S. President Joe Biden said on Tuesday that he would be banning all imports of Russian oil. We're banning all imports of Russian oil, gas, and energy, Biden told reporters. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. The UK government has also joined the U.S., stating that it will ban all imports of Russian oil. However, that's going to be reflected on, and it already is, as gas prices have increased. Some places 15 cents a gallon in a matter of hours. We are paying the highest gas prices since 2008, and certainly not adjusted for inflation, but it's probably not going to be long before we're paying the highest prices ever, even adjusted for inflation. Earlier today, Russian Deputy Prime Minister Alexander Novak threatened to cut the EU's gas supply by closing Nord Stream 1, the main Russian-Germany gas pipeline, if Russian oil imports are banned. It is absolutely clear that a rejection of Russian oil would lead to catastrophic consequences for the global market, Novak said in a statement on state television. The surge in prices would be unpredictable. It would be $300 per barrel, if not more. So we should be prepared for that to be the case. The consequences of these developments are additional price shocks and significantly higher inflation for longer than previously estimated, said Melek. Certainly in the near term, there's not much to replace that Russian supply. I was saying that we could see $145 oil, but it could be higher. For gold, this means more demand, including more central bank buying, which has big impact on prices due to usual volume involved. Now, I will say that if we opened up the regular, already existing Keystone pipeline, right now it is pumping about 30% of its capacity. If we could just get that going at full capacity, that could really help out a lot, at least domestically here in the States, and get some natural gas going and increase domestic production. Then I think that we could help our allies as well through this, but likely that's not going to happen for sure. So in the end here, is $3,000 gold price possible in 2022? Sanctions are continuing to escalate. Some analysts are not ruling out gold approaching this $300,000 an ounce. It's becoming much more of a possibility now that it's reached its all-time high. This is because when gold's record high from the 1980s is adjusted for inflation, it would be at $2,927 an ounce, said Malik. In nominal terms, that was about $850 back in 1980. When adjusted for inflation, it's $2,927. That's a record high if you adjust it for inflation. True that. Although it was a different time in 1980 than it is now, for different reasons. But so it's very hard to conflate those things together. But I don't think it's out of the realm of possibility just because of what's going on if they continue to escalate, especially if what the Russian foreign minister says could occur. $300 a barrel for oil, and inflation continues to go out of control. The path to that level is possible in light of potential central bank gold buying that the world could see this year and the uncertainty around the Federal Reserve rate hikes. Gold is being viewed as a tangible asset that no one can take away, Malik pointed out. I suspect that there's a lot of purchases by central banks. It's turning out that $600 billion of Russia's foreign reserves are useless because its central bank has been sanctioned. The only thing that seems viable now is physical gold. And right now they're trying to freeze that, according to some senators. Again, I'll do a separate video on that, but nonetheless, it is something else to see. I don't know, I haven't looked into the details of that, but I'll check that out momentarily. Their experience is similar to the individual level, as your accounts can be frozen. If they cut off your internet, you can't get your money. But no one can access physical material. True that. On top of the additional demand, the inflationary expectations have surged on a global scale in response to commodity supply shocks. The Fed is going to be in a difficult situation policy-wise, Malik said. If they get aggressive, does that really help inflation? Not really. The supply shock is still there. Inflation impact from higher rates would be later. And there is already a mass negative supply shock, so it might not be wise to do this. The Fed's tightening won't be near enough to cause real rates to move up sharply, and therefore gold is going higher. I tend to agree. Very interesting times we live in for sure. Gold near record highs right now. I hope you were able to get some before this big increase. It does seem to me that even though I'm not necessarily ready to say it's going to go to $3,000, now I do need to readjust my gold prediction video, which is now far surpassed $2,075. $1,975, but it did go past $2,075 briefly and went up over $100 past my prediction in a matter of days. Crazy times we live in. Hang on, folks. And one thing I will say in closing is that I do not celebrate these prices, and that's one thing we should take into account. Yes, we get all giddy and excited when we see the prices move up because it validates our holdings. However, these prices are rising because of a conflict, because of war. People are dying, and so I don't celebrate it in that way, in that regard, because of that. In fact, I would much rather be talking to you about how stagnant gold and silver are, because our economy is doing well, the dollar is doing fine, and we're just moving along here, and everything is fine and dandy. I can't say that, though. But why do we stack gold and silver? We stack it to protect ourselves for situations such as this. And there you have it. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.